Good morning, guys. In today's video, we're going to analyze wheat, okay? So, I know that many of you are definitely feeling quite bored with being outside of the fast-paced tech sector right now, primarily because the tech sector has become the trendiest thing in the world lately. But the fundamental reality is that within the global financial markets, there are always some specific financial instruments going up in value, while others are inevitably going down. Some are overvalued and others are undervalued. As a result, an investor's skill simply lies in recognizing where there are actual bargains and where, on the other hand, there are prices that are just too high, which basically means, let's say, it's a kind of relative risk. To expose yourself to them. Obviously, we are not going to give financial advice on where to invest because we are not advisors. Therefore, of course, you should consult your own advisors to see what they recommend. Today, we are simply going to make a general observation, also looking at a chart and analyzing it in detail from different perspectives. And we hope, of course, to bring you value and to entertain you in the best possible way. So, starting off, let's simply ask a question. How undervalued is the price of wheat? I'll try to be super quick. In conclusion, the current price is about 20 to 25% below the historical average adjusted for inflation. Now, this quick general analysis actually does not take into account the fact of geopolitical tensions, meaning that as long as these geopolitical tensions persist, it essentially creates a sort of shortage of fertilizer. I encourage you to type this simple question into Google. Can a shortage of fertilizer cause an increase in the price of wheat? Spoiler, yes. Why? At this level, or rather here, you can actually find all the articles. I also encourage you to go and read this one. From Il Nuovo Agricoltore, which is basically this one, okay? I'll give you a sort of super summary. Fertilizer, as stated here, is essentially used to nourish plants and enrich the soil. When it becomes scarce, it's obvious to think that not only will this type of relatively discounted price actually be sufficient, but the discount could be even higher because, in fact, the price of wheat could increase even more due to this situation. Not only is it already, let's say, seemingly discounted compared to normal prices, but due to the geopolitical tension which is causing a shortage of fertilizers, a scarcity situation could arise. Even in the wheat harvest, precisely because of the fertilizer shortage. Now, considering all these reasons together, which are all rational, and also looking at how wheat is behaving, probably this way of reasoning is not wrong at all. Now, looking at the chart, what can we see? We can see that from 2024 to 2025, there has been a constant sideways movement around this major support level, which was essentially the 2019 high. And at the same time, it created a very strong volume divergence, which then effectively led the price to reverse. Now, even on the RSI here, we can see that it broke upwards, retesting the long-term RSI on this major resistance, which then turned out to be a subsequent support, and the price effectively started to rise significantly. Now, the real macro resistance at the moment when the trend here has apparently effectively reversed is around these areas above 750, okay? As a result, from now it would be about another 15%, 14 to 15%. That is the first support, okay? Because if by chance the trend actually turns out to be strong, from here, if it breaks, it could even go higher, okay? So very rationally, when we analyze an asset, not only from a chart perspective, but also fundamentally, and we see such strong upward momentum, it might make sense to do so. A more in-depth study, not just within this single chart, but also within the companies that are related. Now, I'm not saying that it therefore makes sense to invest. No, I'm just saying that under such conditions, whether due to geopolitical tensions or because of these indicators that have rationally shown a bullish breakout or in any case a reversal, it makes sense to simply study the companies within this sector because some of them might be undervalued while others may have already taken off. But it definitely makes sense to spend some time on it. If you want in general, generic or more specific analyses on any type of stocks, or in any case to get the charts that help us, like this one here, to be precise within the markets. For example, this, as you can see, is one of the indicators that helps us be precise. It is only available to those who are subscribed to our premium group. The same goes for this one, which indicates the upper and lower value areas, or even this one, which shows the liquidity gaps. In this specific trading scenario, when I go ahead and activate this technical indicator, it clearly demonstrates to me that the very first liquidity gap has just been successfully reached, which is situated right around the level of 684 for the market close. If this zone were to be broken, and if by chance the crisis were to continue on a geopolitical level, it is plausible to see this area acting as a price magnet. With these, I don't mean that the price is destined to reach here. It's something that will evolve and is something to keep monitored over time. But certainly there is an area of attraction here since there is an open gap here. Anyway, if you want to see all these types of analyses, maybe even more specific ones on any other type of stock related to this sector or others, just join the premium group, link in the description, and simply I'll see you in the next video. Take care. Guys,